Friends, in this video for I Thought Wealth, I'm going to talk to you on the topic buying expensive stocks. Over the years, in every bull market, it has become fashionable for everybody to buy the same set of expensive stocks. From a sell side point of view, it's very easy to market stocks which are performing, where the businesses are reasonably stable, where growth has visibility, and where the management has credibility. Effectively, as more and more people buy the same stocks, these stocks become more expensive. Naturally, those who have bought these stocks early tend to show exceptional investment performance, tend to show higher optimism in these very stocks, tend to publicly endorse these stocks by telling that these are the ones to be bought, and the sell side naturally laps it all up. In an era where we are also using technology to identify which are the companies which are performing well, and we are also using technology to disseminate the sets of companies which are performing, this pattern is being captured even better and faster and transmitted to you in double quick time. So on social media, wherever you are, through your subscriptions, through friends, through the platforms on which you invest, you are being fed with subsets or baskets of such companies which are expensive, which have good quality in them, and which are already institutionally well owned. So what is happening is the institutions capture these stocks first, and then the public tend to carry these stocks. Basically, it is the late public buying, the followers who come into the market and look to find their own ideas, who go searching for these names and find them very easily. It is these investors who help sustain these valuations. And when there is overall euphoria in the market, the followers who buy expensive stocks give returns to the early institutional investors. So it is likely, or it is very likely, that today retail is buying these expensive stocks, and the early believers like the PMSs are actually selling to retails. But understand that retail is buying these stocks because it is told through various forms, directly, indirectly, discreetly and indiscreetly, that these PMSs or institutional investors are holding these stocks. So the publicity on the one side is being made about ownership patterns, and on the other side, people are buying it from the very same people whom they believe are owning these shares. This is another trend in expensive stocks which is happening in every cycle. This cycle, we are going to see a shift which can happen when expensive stocks derate. It is not new, it has happened in every cycle. So as a retail investor, it is important for you to save yourself from any potential derating of expensive stocks in course of 2021. So while you were lucky to buy high quality businesses which were costly, which have become expensive and then super expensive, it may make sense for you to protect your profits, to safeguard your investments, and to watermark your portfolio to the present. So in that sense, the responsibility, the onus is on every individual investor. If you are a new investor who is just entering the market, you should be very careful in buying expensive stocks, because the smart people whom you follow, whom you adore, and whose investment decisions you want to emulate may be the guys selling you these stocks. So while buying expensive stocks has been a great strategy in 2020, one need not extend that into a permanent trend in 2021, and you need to be conscious of the risks of buying expensive stocks at super expensive valuations. That in essence is what you need to know about buying expensive stocks. If you like this video, I would request you to share this video with your friends and peers who are learning to invest and are on this journey along with you. And do subscribe to our channel and stay with I Thought Wealth. We are going to be giving you a series of videos related to equity investing. Thank you for watching this video. Stay with I Thought Wealth.